So hey guys, in this video let's just understand the concepts of journal and double entry system of accounting. Now if you are new to my channel, my name is Aman, and in my channel I simplify basic financial concepts, thus enabling you to have a better understanding of finance and accounting related concepts as well. Now without wasting any further time, let's just start the today's video. Before we move on to the journal, there are certain terminologies that I want you guys to keep in mind. Though I have covered these terms in my previous videos, but let's just go through it again. So number one are drawings. So drawings refer to the amount that the owner borrows from the business for their own personal use. And number two are expenses. Now expenses refer to the costs that are incurred by a business. For example, a rent that a company has to pay or the salaries. Number three are assets. Now assets refer to those resources that deliver certain financial benefits to the business in future. For example, a plant and machineries that the company has invested in. And number four are liabilities. Now liabilities refer to those financial obligations that the company has to pay in future. For example, a loan that a company has taken. Now number five are equities and capital. It refers to the amount of money that the owners has invested in their business in order to run their operations. And number six and the final are revenues. Now revenues refer to the sale from the goods and services that the company has produces throughout the period of time. Now moving on to the concepts of journal. So a journal is a detailed record of all the financial transactions that are carried out by the business, and all the transactions are recorded in a chronological order following debit and credit rules. Below we can see the format of journal, which is date, particulars. LF means ledger folio, and then debit and credit. Now the first column specifies the date on which the transaction is being recorded. Now secondly, under particulars column, one account is being debited and another is credited. Now under ledger folio, specific account ledgers page numbers are being included, and debit and credit, which basically means that amount that have been debited and amount that has been credited. Bought goods worth rupees 2000 on credit from Mr. A. Now before we move on to this journal entry, let us understand certain things. In any transaction, there will always be two accounts in which one account is being debited and another account is being credited, and we always have to look from a business perspective. However, in this scenario, we can see that the goods are being purchased. That means that goods are coming into this business. That's why the purchase account is being debited. However, on the other hand, the cash is moving out of the business. That's why the cash account will be credited. But in this scenario, we have the name of the supplier whom we are handing out the cash, that is Mr. A. That's why the Mr. A account is being credited. And below statement we can see that there is a narration being goods purchased on credit from Mr. A, and besides that we have to write the amount that is being debited and credited, which will always be equal. And pardon me, there has been some alignment issues because the debit amount will be equal to that of the debit account, and same goes for credit. They will be in the same alignment. Now let us understand double entry system of accounting with the help of a given example. Now the double entry system of accounting states that any transaction will always involve two accounts in which one account is being debited and another account is being credited. In our example, we have purchases account and Mr. A account, in which purchase account is being debited and Mr. A account is being credited. And it also states that both the entries of debit and credit will be recorded. However, we have did the same, and we have also included a statement below. And lastly, it states that a debit amount will always be equal to that of the credit amount, which refers to the rupees 2000 that we have included in our example. That means that 2000 in debit is also equal to the 2000 amount in credit as well. Now this is the concepts of double entry system of accounting. Now if you like this video, make sure you check out my other two videos of financial basics as well in the description below, and I will be coming out with more of the journal examples in my short videos. Till then, see ya, stay tuned.